On the RBI policy, we are being joined now by Mr. Vaidyanathan, the MD and CEO of IDFC FIRST Bank, and Ritu is here to take this conversation forward. Ritu.
Thank you so much, Harmaz and Rima. And Mr. Vaidyanathan, thank you so much for joining us here on CNBC TV18. Big surprise from the policy, that 50 basis point cut and the 100 basis point CRR cut and the change in stance, of course. First thoughts, what did you make of it and what does it mean for NBFCs like you?
Well, for everybody in the system, whether banks or NBFCs, it's pretty clear that RBI is doing everything they can to support growth. They can see the inflation trending down, so they have seen the data and accordingly taken this decision. And that's obviously going to, in our sense, will support growth.
Well, it will support growth, but tell us, Mr. Vaidyanathan, immediately the first thing that happens when we see a rate cut from RBI, of course, your external benchmark lending rates for banks will go down. What happens to margins? What are the levers to protect it?
Well, I can share our own sense on this front, and maybe our representative was one of the representatives, I'd say, that in our case, about 30% of our book is repo linked. So a 50 basis points cut will give a 15 basis point reduction on that front. About 10% of our book is MCLR linked. Let's call it a couple of basis points there. And because the CRR cut will improve the NIM by about 5 or 6 basis points. So let me say on the existing book, all put together, about maybe 12 basis points on the reduction.
Only 30% of your book is linked to the external benchmark, Mr. Vaidyanathan?
Yeah, to the repo, yes, only 30%.
Okay, in that case, you see a limited downside, and on the liabilities front as well. We've seen in the rate cutting cycle so far, liabilities getting repriced faster. They've already come down by about 30 to 70 basis points for banks. Is there scope for further reduction from here on?
Yes, indeed it should. In fact, this morning anyway, we made certain cuts in our deposit rates. So on the fixed deposit rate front, we have dropped our interest rate straight down to 7%. We were paying about 7.8 or 7.9% maybe until a few months ago. So 7% meaning there is a particular bucket which is really representative because that's the peak bucket. Let me say we've taken a peak bucket down to 7%. So that's a reduction we have done. We have done some reduction on the savings front also. So maybe after this rate cut, we'll have to cut this further.
All right. That's interesting to hear. But coming back to that very surprising, large, permanent liquidity injection in the form of the CRR cut. And now that starts from the 6th of September, and it will be in equal tranches. So assume about 62,500 crores of liquidity coming into the system starting September. How much additional credit could this unlock, Mr. Vaidyanathan? How will your own credit growth number for the year go up on the back of this additional liquidity that the bank gets?
Well, you know that credit has been quite tepid earlier. A couple of years ago, it was going to be 15-16%. Now people are talking of 10-11%. It's been let me say, a significant slowdown on credit. This will definitely, without a doubt, support credit because EMIs will come down. That amount of EMI coming down will leave that much more cash in people's hands. And this is a substantial cut. You can see CRR coming down and repo coming down by 50 on the back of a reduction already done in the last couple of months. So EMI should come down. That leaves the extra cash in people's hands, and that should, no doubt about it, should support growth. And at least we can clearly see that really RBI is doing everything they can. I have a sense that this, maybe it comes with a lag, but it will look up. And to your previous question on the NIMs, just to be clear on the record on what we expect, I read out. I know I said some numbers to you, but the impact on NIM will be a little more pronounced initially because the rate cut is immediate and customers get the benefit immediately. And the deposit rate reduction, when the FD fixed deposit reprice, it takes about maybe 5 or 6, 7 months, 1 year to reprice. So the catch up on NIM, let me say the reduction on NIM that will happen the first 2 quarters, let me say by third quarter, fourth quarter, should normalize again. But if you're running a bank for the long run, these small cycles, 1 or 2 quarters, we should be able to take.
Well, interesting that by the third quarter, you expect any sort of hit that the NIM will take for IDFC FIRST Bank to be reversed once the liabilities also, catch up with the lag.
But it start catching up, so to say.
Yeah. Well, Mr. Vaidyanathan, you did say credit growth is expected to be higher on the back of the CRR cut, but to what extent?
Well, I was talking for the system, for our bank, we have a plan, we're working to a plan, we'll watch this very carefully. Of course, if the market is more buoyant, naturally we'll participate in it. And, but our main thing is that we will want to keep credit quality really in good control. And that is our prime focus. And we will stay to our broad plan about how we want to grow credit, and we'll watch out for the opportunities.
All right, so but no numbers that you're sharing with us yet. We'll get back to that. But Mr. Vaidyanathan, another interesting comment that came in from the RBI governor was on the fact that unsecured loans, credit card loans, it seems that the stress has abated. I mean, is that the sense you're getting as well? And also, on the back of this, are you expecting RBI to revert to the lower risk weights?
Well, on the unsecured front, we have always been saying that unsecured is a cash flow driven lending, and cash flow driven lending on unsecured also behaves almost as good as secured, because cash is also security, and being able to debit a customer's bank account on the due date, having seen cash, is as good as an escrow. To that extent, does give comfort. But RBI has been watching this for a time. They have always asked us to be cautious and asked everyone to be cautious. I think the fact that they of course have a big vantage point to see, and at their vantage point, if they're seeing it, then it's more encouraging. Of course, they also pointed out that MFI stress is exactly not gone away for the whole system. So all in all put together, I mean, it's hard to say whether they will look at the risk weights again, but maybe they will watch it for some more time. Maybe they'll watch it for 6 more months, 9 more months. At some point of time, if they get more comfort, maybe they will.
All right. Well, RBI does have a bigger picture and a view of all of the banks and NBFC's balance sheets. So yes, Mr. Vaidyanathan, finally, as a banker, is there some clarity you would seek from the RBI governor we should watch out for in the press conference?
I think the picture that they're putting out is quite clear, that they see they'd like to see growth and they'd like to support growth. So I think that maybe, of course, this has to be seen in the context of what the government of India does, because government of also kept fiscal under good control. So it's not exactly a question, but it's just a remark that this whole movement has to be seen in the context of what government also does. And I think the really good news here is that I'm seeing that the RBI is doing its bit. After, as RBI is very thoughtful and they really look long. But while they've done what they've done, apart from that, I think probably they're working very closely with the regulator. With the government. Looks to be a coordinated effort. So not really a question, but I'd just say that looks like everybody's aligned towards a broad direction of keeping stability and growth.
Well, yes, and RBI has clearly gone all out in support of that. Mr. Vaidyanathan, always a pleasure. Thanks so much for your time here on CNBC TV18.
Thank you very much.
Thanks a lot for that, Ritu, for that interesting conversation there with the management of IDFC FIRST Bank. By the way, the index now at 24,960.